up, guys? It's Cash Flow Carts. Today we have an exciting video, the October dividend portfolio review and outlook. How much am I going to earn in October? We will find out. Today is Wednesday, September 8th. September 18th, on Monday, September 16th, I came out with this video. I built wealth with dividends after I understood this. In this video, I went over the concept of yield on cost. It's a term I've thrown around a lot on the channel, and I thought it was time for me to really dive into it, really explain it. I do want to create more of that type of content where I am going over very important concepts and kind of my style of dividend investing. And I think this video is great. It's getting pretty good feedback. But I just thought it was funny. Someone said that's asinine. And while I was reading the comments, I was like, wow, these are super nice. Guys, if you comment, I will read it. I will reply. Someone said that's asinine, and I was like, wow, man, what a nice thing to say. Turns out asinine means extremely stupid or foolish. So it's probably the meanest thing to say, actually, but that's okay, guys. The point of this channel is to document my journey and share my methods with you. And if it doesn't resonate with you, I understand, don't watch the videos, but I think for a lot of you it will, and I think we can all learn something from each other and each other's styles of investing, guys. Let's get into it. Okay, so the total portfolio value as of right now is $66,620, guys. Again, short term, definitely by the end of the year, I want to get to that 70K mark, but definitely sooner rather than later. I'm still chasing that 100,000 mark. That's going to be very exciting for me. Let's break down how much this portfolio value pays me, guys. Estimated annual income over the next 12 months is $2,621.02. That breaks down to a monthly average of $218.42. In October 2024, guys, that's actually my best month, I guess my best quarter. My dividends are projected to be $311.65. We will get into why that quarter outperformed so much. November, I will be earning $109.06, and then December, $234.53 from dividends. Okay, guys, let's review the portfolio, starting by sorting the positions from highest market value to lowest market value, guys. Realty Income Corp is my number one position, currently trading at a price of $62.58. I have 215 shares. This one's interesting because while it's my biggest position in the portfolio, there is no capital gains on it, guys. I am still down $573 on Realty Income. Definitely could have acquired more shares of this one if I was a little more, focused on being patient and locking in more shares on some of these dips. As you can see, I was buying as Realty Income pulled back. However, the damage had been done as I picked up the bulk of my shares over $67 a share. My average price on it, $65. Hopefully we will break even soon as we see Realty Income kind of push through this green line, which is the 200-week moving average. Pretty interesting that my biggest position I am down on unrealized. Moving on, guys. Hang on. Realty Income pays me an estimated $680 over the next 12 months. Again, that is a monthly payer. It's my only one of that sort, so it pays me $57. It pays me $57 every month on the 15th of every month. I really like that consistency, but I'm not the type of guy to be like, I need to buy stuff that pays every month, because when you get a blend of these companies, you're getting paid out every month. It's just from different companies, guys. Moving on, Altria Group, ticker MO, currently trading at $50.85. I have 250 shares. It's not likely that I'm going to pick up more of this one. Its market value is $12,714 as of today, and it pays me an estimated income of $1,020. I'm pretty proud of this one. It's been a long time. It's been a long time coming, building out this position and kind of this long-term wedge pattern, trying to pick up shares on dips. I guess I trimmed a little bit here and there, but my average price on it is $44 and change. So guys, on this one, I am up over $6 a share on 250 shares, putting me at an open profit of $1,587.52. That's not, obviously I like unrealized gains as a dividend investor, but for me, those unrealized gains can oftentimes represent I've locked in a great yield on cost. Okay, so I really dig into that in this video I just mentioned. The Realty income position for me, the best part about it is my yield on cost is over 10% on all my shares. Okay, so if that makes sense to you guys, that's essentially I'm getting, for the money I've spent on my shares, my dividend yield on that cost is over 10%. Okay, so that's pretty exciting, guys. Definitely a position I'm proud of, and definitely one that's taken, a lot of time to kind of start to see, the light at the end of the tunnel. But that's what we do here, guys. We take advantage of opportunities on the long term, and we try to lock in quality companies at undervaluation, guys. Moving on, my third biggest position is Apple. Ticker AAPL. It is currently at a market value of $11,051. I have 50 shares at $221 right now, and it pays me only $50 per month. However, this is the type of play that I'm looking for to really pan out over the long term as Apple starts to, aggressively increase their dividend and move from kind of that high growth name we've known for so many years to more of the value, the value play moving forward, guys. My average price on it is $145.50. That puts me at an open profit of $3,779. Sorry, guys, I had to take a quick break. I'm not feeling the best today. I've been working like so many days in a row, and I'm pretty tired. I think I have a little bit of a cold, but that's okay. I wanted to film this video. Today I'm gonna work out, I'm gonna clean my room, and I'm probably just gonna relax here a lot. Hopefully I'll be feeling better tomorrow. Definitely need to get some energy and motivation back, but let's move on. Let's not ramble about unrelated stuff. So Apple, we went over. Moving on, guys, Hershey. I'm very excited about this one. I have 40 shares now, guys. Just before I filmed this video, I added 3 shares. It took me from 37 to 40 total shares. Let's see what that fill was at. Those 3 shares got filled at $199.35. So, like I said, if you guys have been with the channel, and actually I think the video that came out last week, is another Hershey deep dive and analysis. But you guys have known pretty much all my reinvested dividends and net new capital as of late have been going towards building this Hershey position out. So I'm really excited about this one. I am proud, and I am proud of the fact that I've taken this one from $0 in the portfolio to, nearly $8,000 in just a few months. That's definitely a big achievement, but I do see myself continuing to build this one in the consolidation phase it's in right now, and hopefully pick up at least 5 to 10 more shares while it's under that $200 mark. This is definitely one I could see in the short term taking to a $10,000 position. It's kind of one of those things where, guys, and I'm sure you've been here, you're building out a position aggressively and you keep buying shares. However, it just still doesn't feel like enough. You see the position getting bigger and bigger, and it just motivates you to keep buying and keep taking that position higher. So I definitely do want to take this one from kind of a, one of these medium-sized positions in my portfolio to one of these larger positions. I'm not sure what the time frame is on that. We will have to take what the market gives us. But my current price, my cost basis on it is sitting at $186. That puts me at an open profit on it of $517, guys. And that pays me $219.20 over the next 12 months. I'm not going to rave about Hershey in this video, as I have done, very often in recent videos. But I will say, as long as this one continues to hang out under the $200 mark, I'm probably at a point where I'm going to keep buying it. So moving on, guys, we got Starbucks. I've been a big Starbucks enjoyer lately. My car is actually in the shop, and it's kind of been a huge pain in the butt because I've had to DoorDash a lot. I haven't been able to grocery shop much. I haven't been able to go pick myself up food much. So, I guess in looking on the bright side, I've been a very loyal Starbucks customer, guys. The market value of this one is $6,792.80. That is 70 shares trading at an average, or at a current price of $97 and change, guys. And that one pays me an estimated annual income of $159.60. We will peek at the cost basis. I think I'm up slightly. Well, no. My average price on Starbucks is almost $82. Like I said, it's trading at, we'll call it 97. Okay, so I am up $15 a share on 70 shares, putting me at an open profit of $1,050 on this one, guys. I have picked up a few more shares of this one as it kind of pulled back, but as opposed to the Hershey thing where I'm like very hungry to buy more shares, with my Starbucks position, I'm pretty content right now having it as like a medium position in the portfolio. And I think that boils down to, not necessarily the fundamentals and quality of the company, but I think it more boils down to my own personal risk tolerance as an investor, guys. I see something like Starbucks as an amazing company with a wide moat, but I also think there is more social risk and that type of thing versus there would be in something like Hershey, guys. That one pays me, like I said, $159.60 a month, guys. Moving on, we have Pfizer, ticker PFE. That's at a quantity of $225 in the portfolio. and a market value of $6,730 roughly, guys. That one pays me $378 estimated annual income. And, I have continued to build this one out quite a bit. But if you've been with the channel, you know this one has not been an easy ride. I've been buying this one for, let's see, since May of 2023 is when I started adding this one to the portfolio. I started adding it after it fell below 40. I thought we'd see a bottom in the short term. Since then, it has continued to fall. It has cracked below 30 on multiple occasions. Even I think the low was, it got as low as 25 and change. So this one's been a tough one. And it's kind of been one of those where you have to have that strong conviction and you have to have kind of the bankroll to continue building out this position, guys. I'm going to continue to do so, and hopefully in the coming months, hopefully by the end of this calendar year, we will see Pfizer break above my cost basis, and I can kind of be done with it for a little while and enjoy kind of the dividend income. But I will keep you guys updated on the channel. Moving on, we got Microsoft, a similar guy to Apple for me, where I'm more kind of focused on as they switch from higher growth to more of the value name, or at least kind of a hybrid. And in that instance, I'm really expecting both Apple and Microsoft to kind of aggressively grow their dividend. And I will reach kind of that great yield on cost territory, guys. I have 15 shares of Microsoft at a market value of $6,480, and it pays me $50 in estimated annual income. Same thing with Apple. I'm still seeing Microsoft as pretty overextended, at least from a technical standpoint. You can see, earlier this year I did trim 5 shares when it, peaked above 450. I'm not going to trim any more shares of Microsoft, but with that being said, I do anticipate some type of correction in this one. We've seen it before, guys. Sometimes this one kind of runs away and then corrects. And I think we're kind of seeing a similar type of situation on it right now. So I'm not really interested in picking up more shares until we see Microsoft, get closer to that $300 level. Maybe low threes, maybe at least if it can break down 350. Ideally, I would like to see it break under 300 before I wanted to go ahead and keep building this position. However, my shares are not going anywhere, guys. Last but not least, we have T. Rowe Price Group, ticker TROW. I have 13 shares. It's currently trading at $108 a share, and that puts me at a market value of $1,408, guys. That position will be paying me $65 in estimated annual income. And yeah, we've addressed T. Rowe multiple times. I'm pretty much break even on my shares. My average price is $105. So, I'm up $3 a share roughly on it. And I should be picking up more shares in kind of this consolidation phase. However, if I can be, pretty honest, I've been much more excited about the consolidation we've seen on Hershey than the consolidation we've seen on T. Rowe. So for the time being, I'm okay keeping T. Rowe at kind of my only really small position for the portfolio value. I'm definitely going to revisit it, but it's going to take, a lot more due diligence just for me and my personal risk tolerance, for me to get comfortable taking kind of something in the financial space to a medium position at some point. We will have to wait and see, guys, but as always, I will keep you updated on the channel, guys. It's been great. Thank you, everyone, for the support on the channel. And if you're not subscribed, please hit that subscribe button, guys. I appreciate all the support, the comments, the positive, the asinine. That was a little funny, but guys, this is Cashflow Cart. Again, I drop videos every Monday at 6 p.m. and I would love to have you as part of this community, guys. Take care and let's build wealth.